Hello, I'm Alan Kohler, founder of Eureka Report, finance presenter on ABC News and a columnist for The New Daily.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey, shareholder advocate and City of Manningham councillor.
And we are
The Money Café online.
Online, yes. Well, I went down the cafe but no one was there, were they?
You don't read your emails, do you, Grandpa? Greg emailed to say he was crook with doing it online, and Alan turns up to the cafe.
He does. Well, there we go. Luckily, it's not very far from home.
Yes, you're able to stroll home, and we can now get on to US politics and big tech. What do you think of all the probably the most dramatic 6 weeks of US political history, certainly that I can remember in my lifetime?
Absolutely. Well, it's been huge, of course. But I saw some polls this morning that Kamala Harris, on at least one poll, I can't remember the name of it, is ahead of Trump.
Yeah, well, I think she's going to win. I get sick of people saying it's all over, it's a certainty. I mean, it was never a certainty for Trump. Biden was unelectable. It did look toxic for him.
It was a certainty for Trump if Biden stood, but now it's definitely not a certainty. And in fact, Kamala Harris, I agree with you. I think she's more likely to win than Trump is.
Yeah, and that's partly because Trump has been even more crazy than ever. I think a very poor vice presidential pick. Crazy comments about the Taiwanese stole 100% of our chips industry. When the biggest Taiwanese chips company is currently investing close to 100 billion Australian dollars in Arizona in 3 chip plants, and he tanked the Nvidia share price when he said that, talking about Hannibal Lecter. He's just madder than ever.
He's now the oldest presidential candidate in history.
Yeah, that's right.
So he's clearly in some sort of cognitive decline.
Yeah, that's right. And Harris has just been spectacular with her shock and awe campaign. I mean, TikTok yesterday, it was just extraordinary what got flooded down TikTok, and young voters are energised. She's got an important decision to make on her VP choice. I reckon she'll probably end up going with the astronaut from Arizona, Senator Kelly, because his wife Gabby Gifford did survive an assassination attempt. So they've got a really good story on that. Everyone loves an astronaut, and he's even got a twin brother who was also an astronaut. So the two Kelly brothers can campaign as one, identical twins.
Yes. Have you been keeping an eye on the big tech results? Speaking of NVIDIA.
Yes, well, I mean, we've just had Tesla and Alphabet come out of the last 3 hours. So Tesla slightly underperformed, so the stock was down marginally, but it's still valued at US $770 billion. So they're okay. It wasn't a major miss. And Alphabet, own of Google, YouTube, etc. They had cloud revenue for the quarter, which went through $10 billion US. So that was quite a milestone for their emerging cloud business. But just to put that in context, Alan, advertising remains search-based advertising remains the killer application of the internet, and their advertising revenue was up 11% to 98 billion Australian dollars for the quarter. So, it just is phenomenal. All the YouTube ads, the search ads, it is amazing. And then you've got the AI capital expenditure issue as well, and they're talking about spending $13 billion a quarter on CapEx US in the last quarter, and the next 2 quarters will be $12 billion US. So that sort of massive CapEx on AI is certainly very chunky numbers, but the core business, the revenues and the profits in the core business are so strong that they can absorb that. They can handle a massive CapEx on AI and still make, US $23.6 billion in net income for the quarter, which is just a staggering number for Alphabet.
And a lot of that CapEx finds its way to NVIDIA, doesn't it?
Exactly. So they're all spending up enormously with NVIDIA. It's a big tech game, isn't it? It's just how the big boys are all going to play big tech.
In fact, the general, not just Alphabet, but the capex in AI is extraordinary in general, and it's hard to imagine how they're going to make enough money from AI to justify it.
Look, I agree with that, but I think it also it cements their broader dominance in the wider tech space. So I think they, as the giants, they just need to be seen to be dominating the next big thing. And they're between Apple, Google, Microsoft, NVIDIA, they're the ones who can afford it. So it's a big boys game. And I agree. I can't see the actual direct return on this extraordinary investment they're doing. But, their share prices are holding up. They're spending tens of billions of dollars, and they still dominate the world like nothing we've seen before in the corporate space.
They need to come up with another killer app for AI, which, they haven't yet done. The AI that's the most people are using at the moment simply replaces Google search.
Correct.
With a single question. You ask the AI the question and it goes and finds the answer, which is great. I love it, but there's no money in it for the purveyors of it.
Yeah, I mean, maybe the personal executive assistant sort of side of it, where AI sort of runs your life, but
it's going to be incredibly competitive. There's dozens of them.
Yeah.
So I don't think anyone's going to make tons of money unless the only way it seems to me that they'll be making a lot of money is if AI replaces a lot of human beings.
Oh, well, I think that's a given, isn't it? It's going to be absolutely job losses all over the shop. So, yeah. And there's also an interesting question with who big tech backs in the election. So Melinda Gates has just come out and backing Kamala, and they've long been very close. Sheryl Sandberg is very close with Kamala and is also a strong supporter. And then you've got, obviously, Elon Musk on the other side, putting $46 million a month into a super PAC to back the Trump election, even though Trump is a critic of electric cars, which is an interesting sort of situation to try and understand.
Well, that just indicates the madness of Elon Musk as well as that of Donald Trump, I suppose.
Yeah, well, I agree. And also I think the Rupert Murdoch situation is interesting. Like, there's an old thing, don't disrespect Rupert. He's the greatest survivor. He's headed the most powerful family in the world for the last 3 decades, and the Trumps were very disrespectful of Rupert over the last week. I mean, he lobbied, he spoke to Trump personally about putting in Doug Burgum, the billionaire North Dakota governor, as the vice presidential pick. He's the former Atlassian chair, Doug Burgum, so there is an Australian connection. Trump ignored him, just went with this crazy guy, J.D. Vance, then stuck Tucker Carlson in the presidential box. And, of course, Tucker Carlson is running a massive vengeance campaign against the Murdochs. And then you had Donald Trump Jr. popping up on TV during the convention, gloating about the fact that isn't it fantastic, we don't have to bend the knee to Rupert anymore in the Republican Party. So Rupert, who was sitting in the bleachers watching all of this, won't have enjoyed that. And I think how he plays, and, Fox, the Wall Street Journal plays Trump going forward will be a very interesting thing to watch.
I agree with that. Absolutely. Fascinating. It'll be a bit of a swallow for them to jump on the Kamala Harris bandwagon, don't you think?
Well, yeah. I mean, don't forget that the Sun did endorse Keir Starmer in the UK, but only the day before the election. So look, you're not going to see Fox News coming out saying, hey, you must vote for Kamala. But, yesterday they cut away from Vance's speech early. So there's lots of different subtle ways you can play that, the level of your support. And I just think that Rupert will recognise how mad Trump is, and he's strong. The Murdochs are strongly on board backing Ukraine. So I just think that he is the most powerful media person to contemplate in the US, more powerful than Musk, even though Musk was gloating that Biden chose to disclose his withdrawal at 1:46 p.m. on Twitter before he did it anywhere else on Sunday afternoon. The moguls will be interesting.
Which is amazing in itself. I mean, Christ, that's I think that's such a development.
It is amazing. But look, he had COVID, so he obviously couldn't do a press conference, and he wanted to control the narrative and not have leaks. So that's the forum that gets it out fastest. So
Yeah, that's true.
yeah, I thought it was understandable. But what do you reckon about whether he should have just gone altogether, resigned altogether, and let Kamala run as the incumbent president?
That could still happen. But yeah, I think there's an argument for that. But he's, seems to be wanting to see it out till January next year.
Yeah.
Look, I don't think it matters that much.
I mean, that I guess you're right. That could still happen, and crazy things that happen. Donald Trump could pull out as well. I mean, he could suddenly see the polls. It's a disaster. I don't think it's likely, but these are crazy times. Don't rule anything out. But this Kamala shock and awe, I think it's she's going to make history in November, I reckon.
Yeah, no, I agree. Back to Australia, where do you think the CFMEU story is going? What's going to happen there?
Well, I think it's too hard a job to put one person in as the administrator of this multi-headed beast, which has net assets of more than $500 million. I mean, the CFMEU it's a big federation, I mean, just for instance, it owns a pokies venue in Canberra called Tradies, which has got net assets of $65 million. The construction division in Victoria alone has $40 million cash in the bank, net assets of $106 million. So it is a very big, rich, powerful, unwieldy beast, and I don't think one person can do it. So my personal solution is that a Quarter-Mentha type firm should be appointed administrators, not an individual, and then they should combine stability of management with forensic accounting, then feeding what they discover into some form of judicial inquiry. Labor will be reluctant, I think, to call a judicial inquiry because it will end up being very embarrassing and could go anywhere. So my prediction is that there'll be a change of government in Queensland in a few weeks in the election, and that they will call if the Conservatives get up, as seems likely, they'll call a Royal Commission into the CFMEU and do it through a state-based mechanism. But look, it just needs massive cultural change. It's extraordinary, the revolutions. I've never seen such powerful television as what Nick McKenzie delivered on 60 Minutes. And the Labor Party is, massively embarrassed. I think massively embarrassed.
I think it's interesting that, so presumably the government has the power to just simply appoint an administrator and declare that CFMEU is insolvent or something. Is that right?
Well, because it's a federation, and there's even like different divisions within the broad umbrella. So I mean, don't forget that that guy who had the suitcase dropped at his home, the vision of that, Leo. He's the secretary of the manufacturing division of the CFMEU. So you've got different divisions within there. You got forestry, you got mining, you got energy. So I think the idea is to appoint administrators just to the construction divisions in the East Coast. So it's not the whole thing, but I think you're going to see basically get broken up. You're going to see, I think ultimately they have to change the name. The names become so toxic that you will see a name change. You will see, a bunch of, I mean, they've already kicked out, 20 bikies out of the Victorian division, but they've only named one of them, which is Dean Martin, Dusty Martin's uncle, who briefly dated Senator Lydia Thorpe. So I thought that was quite interesting that he's the only name that's dropped. He's going to be deported back to New Zealand. So, it's just a remarkable thing. But look, even Rod Sims was saying, the ex-ACCC boss, that they're adding 30% to construction costs.
Sure. Well, that's right. But you could argue that they're doing a good job for their members thereby.
Oh, well, that's exactly right. They're doing a great job for their members, but they've been exposed to be getting into, standover corruption, thuggery, racketeering, kickbacks, cash payments, home visits, the full box and dice of unacceptable behaviour, as well as delivering for their members. So, for instance, we've got the $26 billion Northeast Link happening on, in Manningham, in my local council area. And I went for a walk yesterday down the Coonung Creek, which sort of abuts the project, and was amazed to see there was 3 CFMEU hard hat wearing people working as lollipop people on pedestrian bridges along the walkway, to walk over the freeway. There was a guy standing there with a stop-go all day. There were 3 of them. And I'm just sitting there going, this just can't be possible. Like, and of course the CFMEU approves every single traffic management contractor, and so I think the waste is extraordinary.
Those guys are probably on six-figure salaries too.
Well, that's right. But so I said to the people, "Can I walk over this pedestrian bridge?" Yeah, good, mate, you're good. And I'm just like, I can't believe you're standing here when there's no cars. You're a stop-go person when there's no cars. And anyway, look, it's just I think the rorting and the ghost jobs and the sharing of the profits, and I think there's going to be a lot of deep dive forensics into that. A lot of money's going to be getting repaid, and quite a few corporate partners of the CFMEU effectively, I think, are going to be pretty uncomfortable as well because they've been in on the giggle and going along with it, or the expense of taxpayers.
Yes. No, it'll be fascinating to watch, that's for sure. And I agree with you. I think it has to end up getting broken up, doesn't it?
Well, broken up, and there does need to be a judicial inquiry. I mean, it needs people need to be on the stand, giving evidence under oath, with all the powers of an ability to produce documents. So, and I think sort of a casino gambling style model where you have to be cleared, pass probity, fit and proper tests, to work on particular government big build sites. I think you might see a model like that also emerge. But for me, the most interesting thing is who is going to actually call the inquiry. Like, not a massive, ridiculous, all-encompassing Royal Commission, but similar to what happened with Crown Melbourne with Sydney. The gambling regulator appointed a former judge to do a judicial inquiry, Patricia Bergen, a couple of really clever QCs, Adam Bell led it, and then absolutely carved Crown Casino to smithereens through a process that only went on for a few weeks. So I think we do need that specifically focused on the CFMEU, not some wider politically driven Royal Commission into unions and their connections to the Labor Party.
Yeah, but we need a non-Labor government to do it, as you point out, which has to be Queensland.
Well, if that happens, I mean, I think maybe Albo or Jacinta Allen will get brave, but I think it probably makes more sense to have a Victorian-based judicial inquiry into.
Absolutely, of course, that's true.
Yeah, so that would be the most focused, and you've got to get John Secker on the stand for a week, and who do you know, who are your mates, how did it work? I mean, that's what needs to happen.
Yes. Now, just before we move to questions, are you going to the Macquarie AGM on Thursday?
Yeah, so Macquarie AGM tomorrow. Anyone who's in Sydney should go along. 10:30 start at the Sheraton Grand on the Park. I'll be lobbing in a few questions from home because it's a hybrid, and I think there'll be a few interesting issues that come up. Last year there was a big protest on their remuneration report because ISS, the proxy advisor, said that the people were getting paid too much because Nick O'Kane, their head of the energy business, famously got paid $57 million. Well, Shamara, the CEO at the time, said that he could make many multiples of that elsewhere. And I was sitting there going, come off it. Anyway, sure enough, Nick O'Kane resigned during the year and went off to the Swiss commodities trading house Macquarie Energy Trading. So,
do you know how much he's making there?
Well, obviously, it has to be more than the $57 million a year he's getting at Macquarie. So ISS this year has recommended in favour of the Macquarie remuneration report. So there won't be any protest votes at tomorrow's AGM. I think there'll be a bit of a debate. I'm going to raise it about the Thames water debacle. It's a massive issue, the abomination of water privatisation and open sewerage, Londoners' nationalisation coming, Thames Water being lumbered with $24 billion of debt. And Macquarie did control it for 11 years up until 2017 and have been getting a lot of bad press in the UK. So I think I raised it last year and I think I'll give it a go tomorrow as well. Also, Glenn Stevens is up for re-election tomorrow, the former Reserve Bank governor. He's on a tasty $935,000 a year in cash to be the chair of Macquarie. So I always love asking him about the $11.3 billion that the Reserve Bank lent Macquarie for 3 years at 0.1% during COVID. And because, he always goes, I don't know anything about it. I found out about that when I read the papers like everybody else. So, but they've all had to pay that back now. So the big banks are no longer getting those ridiculous the 3 year 300 billion, 0.1%, which was a massive subsidy from the central bank's printing machines during COVID.
But you're going to ask him it anyway, are you, Stephen?
Well, because it's now being all paid back, I'll ask him, did we wait until the June 30 to make the final payment, or did we pay it back earlier? How did we roll the final? I'll get him talking about that. And Shamara, the CEO, she's a class operator. I love the fact that she owns $245 million worth of ordinary shares. And the other one is their bonus scheme is incredible. So earlier in the year, they went on market and they had to buy $667 million worth of shares to satisfy the bonus scheme. And they bought 562 million of them from existing or current and former staff who own shares anyway. And then they bought another 105 million on market to come up with the $667 million worth of shares to satisfy just 1 year's bonus share scheme. So the model of don't pay them much as base, give them a truckload of stock based on a profit share and lock them up for years to keep them loyal so it's too expensive to leave. It's just worked a treat for 40 years, and the numbers are getting absolutely huge now as the stock's at $207 and the Millionaires Factory is valued at $80 billion. I mean, it's a phenomenal Australian success story, getting a majority of its profits offshore.
It certainly is. Very good. Okay, well, before we move to questions, let's have a quick word from our sponsor.
Are you passionate about investing or just starting your journey in the world of finance? Tune into Stocktake, the podcast from the Intelligent Investor Analyst team that's your gateway to value investing and deep dives into ASX and globally listed securities. Join Intelligent Investors Analysts as they bring the world of investing to life with engaging insights, entertaining stories, and their take on the latest market movements. Subscribe to Stocktake today on your favorite podcast platform or head to intelligentinvestor.com.au/podcasts to hear expert knowledge and perspectives that can help you make smarter investment decisions.
Okay, just before I go through the first question from Adrian, happy birthday, Stephen, for yesterday.
Oh, thank you, Alan. Yes, I'm 55. I think the only thing that's meaningful about turning 55 is that there's some retirement villages that you're now eligible to move into. That's the only thing I can come up with about how your life changes at 55.
Well, there you go. Well, my parents moved into a retirement village and loved it, so you could do that.
Yeah, no, I'm having a think about that. So
I'd come and visit you, Stephen.
Yeah, that'd be great. We could even do a Money Cafe there, Alan. So,
we could in the common room, or perhaps on the croquet lawn.
Yes, exactly. But no, feeling quite old at 55. So, but thank you for that. Now, first question this week is Adrian. This week I read about the ASX Accumulation Index for the first time. On the same day the S&P ASX 200 hit 8,000, the S&P ASX 200 Accumulation Index, which includes dividend, reached an astounding 103,000. While the index has grown the regular index has grown by 33% since 2007, the Accumulation Index has risen by 182%. Surely we should be talking more about the Accumulation Index rather than the standard ASX 200 index. What do you reckon, Alan?
Oh, look, I suppose so. I mean, the thing is, what I report on the news is the capital gain of the index. The dividends are kind of, almost a given. The dividends are kind of standard 4% a year or whatever. So and all of us tend to just report. All of those who report the market tend to report what the capital gain is doing. And that's it. But I suppose we should talk about the accumulation index at least occasionally.
Yeah, well, it's not as if we don't talk about accumulation index in other ways. I mean, CEO bonuses or incentive grants are most commonly based on relative total shareholder return, and obviously total shareholder return includes dividends. And obviously the super fund league ladders that we've seen in the last 2 or 3 weeks, talking about who got 8%, who made 11%, that obviously is a combination of dividends and capital growth. So it's not as if the system doesn't recognise dividends, but we are the most dividend-obsessed country in the world from a share market point of view because franking credits make dividends so tax-preferred we end up, Warren Buffett never pays a dividend at Berkshire Hathaway, but all our companies are pressured to pay dividends to get rid of their franking credits. And that explains why we also have so many capital raisings. I mean, this year alone, we've already had 71 different capital raisings for more than $20 million, because the public companies are under so much pressure to pay out their profits in dividends and get the franking credits out the door. When they want to suddenly take something over or do a deal, they have to go back to the investors and raise fresh money. Whereas in the US, where they don't pay many dividends, they've usually got plenty of cash on board just to fund any acquisition without doing a secondary capital raising.
Well, it's not a bad system, that making the companies have to, if they want to do something to make a big acquisition or a big capital expenditure, they have to ask shareholders. I think that's fair enough.
Yeah, but it does create a massive churn as well. I remember back in 2015 when the APRA prudential arrangements changed for the banks, and they basically did $20 billion of capital raisings. In the same year, they paid out $20 billion in dividends. It was just this one great big churn, which is great for the ticket clippers, the underwriters, the investment bankers. But does it really make sense to raise $20 billion and then pay out $20 billion in the same year by the bank? So sometimes I think it gets a bit. It's all tax planning, obviously, but it does create quite a good environment for the big Wall Street ticket clippers, because we have so many capital raisings because we pay so many dividends that leaves balance sheets stretched in terms of having flexibility to do stuff.
It just it shows what how much taxation influences what happens in the world, doesn't it?
Show me the incentive, Alan, and I'll show you the outcome. If you make dividend payments the most tax-preferred way to get money into the hands of your shareholders, particularly with the cash top-ups, which Shorten and Chris Bowen tried to get rid of in 2019, then you will have a system that absolutely maxes out those dividends, and then you'll have a lot of capital raising as well to replenish the balance sheets.
Yeah. Christopher says, thanks for the podcast. Recently, the big seven have gone bananas while non-tech companies have languished. When Trump wins, I think the other mainstream companies that comprise the S&P 500 will take off. Is there a good ETF that focuses on non-tech firms listed on the S&P 500? Perhaps a US energy stocks ETF would be a good bet. What do you think? Well, for a start, Trump might not win. Secondly, it actually isn't the seven. There's really just three that have taken off, which is Microsoft, Alphabet, and NVIDIA. The other four members of the Magnificent Seven, as they're called, haven't done that much at all over the past 12 months. But yeah, so non-tech ETFs. Look, there are some. You just need to go through the list on the ASX. You Google ASX ETPs, exchange traded products, and you'll find the list, and they're one. If you look for one that's on the Russell 2000, if there is one, I can't even remember if there is one. But the Russell 2000 tends to, obviously by its name, is the largest number of stocks. It's 2,000 stocks, and so therefore it's mostly small caps.
Yeah. And also, I think the other point to remember is that, Trump might have been saying, when I get elected, it's drill, baby, drill, as if to suggest that Biden's been locking up the fossil fuel industry. But right now, the US is producing more oil than any other company in the history of the world, any other country in the history of the world. So it's not as if electing Trump is suddenly going to energize a whole bunch of industries. I think the risk is more on the downside. If he does introduce this 60% tariff on China, it's going to be hugely inflationary in the US, and I think will hurt quite a few companies that are dependent on China, because there'll no doubt be retaliation from China. And then you get the whole issue of the Teslas and the Apples of the world that are massively reliant on China for their supply chains and productions, how they cope in a trade war, a Trump-induced trade war based on the nationalistic tariff slugging of Chinese products. So, it's a lot more complicated than just Trump's going to be good for the markets. Let's buy non-tech stocks.
It certainly is. The next one's actually a question for you, Stephen, so I'll read it. Judith says, Treasury is currently doing a review of the temporary COVID rules relating to public company AGMs when the default for a new shareholder became online communications, not snail mail, and many companies embrace online AGMs. Which is better, physical AGMs, virtual AGMs, or hybrids? I think I know the answer that you're going to give here, Stephen.
Yeah, look, the hybrid obviously is the best system. There's a lot of companies that aren't doing them, particularly the billionaires. So, Solly Lew and Twiggy Forrest, Jerry Harvey, Kerry Stokes, they all did virtual AGMs during COVID, but have gone back to physical meetings now because they don't like copying the online questions that people like me type into the system and offer up to them. So I'm hoping, I've done a submission for this, I'm hoping the government will mandate hybrid AGMs, because you don't want to have virtual AGMs because they just turn off your question. It's too open to censorship, and I've had many examples of questions being rewritten, censored, not asked, shut down online, which can't happen in a physical setting. So I think the safest thing is to lock in hybrids, which hopefully they'll do. And the pivot away from paper-based communications is also interesting. So when the default mechanism became everyone's online getting emails, unless you opt in for physical notifications, what I've noticed with that is that voting numbers have fallen. Participation in capital raisings have fallen because many older shareholders don't even know the capital raising is on. And so when I run for a board now, and I ran for a couple during COVID, it's crickets. I don't hear from anyone because I think 95% of the shareholders don't even know there's a contest on because they're no longer having the full notice of meeting mailed out to them automatically. So it's great for the environment to have the default mechanism being everything's online unless you tell us otherwise, but it's disenfranchised a lot of shareholders, in my view, and it's quite a tricky one because, people are getting deluded, not even knowing about capital raisings because they haven't signed up for the online or worked out how to navigate a capital raising application form without having the usual paper form and the reply pad envelope or the BPay details coming through on paper, which is very easy to process.
It's your turn to deal with Ben's question.
Now, Ben says, when the Republicans win in November, all these questions have obviously come through since Biden tapped the mat, but when the Republicans win in November, there are many economic plans that they will implement, but the one I'm interested in is the plan to devalue the US dollar, which I believe Vance is particularly keen on. What are the best strategies to take advantage of this, do you think? So what do you reckon? What are they going to try and devalue the US dollar, or is that a risk? Is it going to happen, Alan?
They're probably going to try. I mean, it's worth bearing in mind that the reason that the US dollar has been strong over the past 12 months is because the world's investors are desperate to buy it so they can buy technology stocks. So it isn't just US investors that have been pushing up the Magnificent Seven AI stocks. It's been investors all over the world that have been madly buying US dollars to do so. So that's kind of the reason that the US dollar is strong. And the only way really to bring it down again is if there's a tech crash. And that'll bring the US dollar down, that's for sure. But I don't think anyone wants a technology crash. And the other thing is that obviously the US dollar remains the world reserve currency, which means that everyone's more comfortable trading in it. That's a bit under threat because of what China and Russia and so on are doing. So there's a bit of a drift away from the US dollar as the reserve trading currency, but I don't think that's going to end in a hurry. So look, I think that it's going to be difficult for them to bring it down unless there's a technology crash in the US stock market.
Yeah, I agree. And if you were managing the system and you suddenly said, well, okay, we're going to move away from the US being the reserve currency, how do you do that? I mean, do you just all agree you'll trade euros? You put all contracts in euros, or do you suddenly all embrace Bitcoin? I mean, it's almost impossible to do, isn't it? I mean, you can't go back to the gold standard.
That's right.
It's so baked into the plumbing of the world capitalist system that I think, and that undermines US hegemony because it means they can print endless amounts of the global currency whenever they want, and that's an enormously powerful device. Do you think Trump will undermine the US Federal Reserve? That's also interesting, whether he moves against Powell. I mean, do you see any risks with that whole sort of Trump-Powell interest rate setting dynamic?
Yeah, sure. If Trump became president, he'd probably have a crack at that. I mean, the Project 2025 is a wide-ranging effort to replace all of basically the entire American civil service with Trump loyalists, which presumably would include the Federal Reserve. And I think that's right, but it would be absolutely catastrophic if they tried that. Look, I think we're much better off not with Trump in the White House. That's for sure.
It is interesting that every one of his cabinet who worked for him in the previous term, is not endorsing him. I mean, you can't get any more emphatic. And it's only like 10% community support for Project 2 2025 as well. So it's almost as unpopular as Roe v. Wade and full abortion bans that Vance is all over. So he's got so many massively unpopular things about him. He'd have to run the mother of all immigration scare campaigns to win, in my view, because that's the only thing he can really run on that will be politically potent, is the whole you're being swarmed by migrants thing because the Democrats are hopeless on the border.
That's right.
Now, Peter says...
well, I was just going to suggest we go to Lachlan's correction, which is worth repeating, because the latest episode contained an erroneous response to David's question regarding Life 360's NASDAQ ASX dual listing. David told us that to come onto NASDAQ at 3 times the value of ASX shares, but that's because Lachlan tells us it's because it trades on the ASX as a CHESS depository interest. I think he means the NASDAQ as a CHESS ASX CHESS, in which case is the equivalent of 1/3 of a share. So basically, it's 1/3 of a share, which is why the NASDAQ is 3 times the ASX price. It isn't some sort of extra price that the NASDAQ puts on it, which means that you'd get the same dividends no matter what.
It is interesting. It was good to have that explained, because I've often thought, why doesn't the ASX insist that CDIs, because they effectively hold the sort of shadow equity, in their own CHESS system, why doesn't the ASX insist that it's 1-for-1? I mean, it gets confusing when things are like 3-for-1 or 4-for-1, and it all just comes down to the simple concept that investors in Australian shares are not used to paying more than $20 a share, or maybe $50 a share, whereas in the US, everyone is comfortable with shares being in the hundreds of dollars. So the way they get around that is they come up with this CDI, which is, the equivalent of 1/3 of a share. And then you get the confusion about, why is Life 360 trading at 3 times the Australian equivalent? Oh, it's because the ASX has agreed that they're going to try and make the CDI more buyer ready for the Australian retail investor, because it'll trade at 1/3 the price. But then you get confusions. And I mean, the bottom line is the dividends are the same, but this thing's not as a US stock, so they're not going to be paying any dividends, because most US tech stocks don't. And I don't think Life 360 will be paying one anytime soon. But
no, that's true.
I mean, one question from Macquarie tomorrow, Alan, will be, your stock's at $207. This is un-Australian. Can you please do a 10-for-1 split so it trades at $20? Not $205, because it's too expensive for your ordinary mum and dad shareholder to buy a few now. But the likes of CSL and Kohler don't do these share splits very often for some reason, because they're proud of their high share price.
Well, that's right, and I think we're getting used to it too, with CSL, Kohler, Macquarie, CBA above $100. I mean, I think that's okay. We can get used to it.
We can get used to it, but it's even worse at the other end, where you get so many shares that are trading at 0.1 cents or 2 cents or 3 cents, because they're mining tiddlers that have had to keep doing endless capital raisings. And I think there should be a rule at the other end as well, which says you've got to do a consolidation so your share trades above 20 cents. So you've got to do a 1 for 20 consolidation. So there should be a broad rule, is that stocks should trade between 20 cents and $20. That's the Australian way. And if your share price gets too high, do a share split. If your share price gets too low, do a share consolidation. But we don't see much action at either end of that.
No, that's true. That is true.
So Ricky's got a question about, I see that many US current and former senators and their family members have an uncanny ability at picking stock winners, particularly within the tech sector, and managed to beat the S&P return. So Ricky's referring to a Yahoo story pointing out that Democrats have done better than Republicans, but there's a much bigger culture of owning stock amongst US politicians. And then Ricky goes on to ask, which of the Australian politicians are big investors or have been rich over the years and successful investors? And my answer to that was, Clive Palmer's worth $20 billion. Obviously, you had Turnbull, but we don't have nearly as many sort of multi-millionaire politicians as the US. And I think we've got a culture's not so inclined to having politicians trading in stocks. You often get scandals in the US where someone's sitting on a committee and bought shares in the stock during the committee hearing. It's a bit of a dodgy system over there, I have to say.
Yes. No, and we'd come down on like a ton of bricks, the media would in Australia.
Absolutely. Conflict of interest. Sell your stocks.
One more question. He says, not necessarily to be read aloud, but we're going to read it aloud, John. I was amazed to hear you have a list of 350 foreign companies that turn over 200 million in Australia. This seems huge. I'd be fascinated to see the list.
It's freely on my website. You just Google it. But it's interesting that in terms of which are the biggest foreign companies in Australia, and I would say it's probably, Rio Tinto, massive iron ore interests run out of London. The Canadian giant Brookfield has been buying up all sorts of Australian businesses from Multiplex to Ausnet to you name it. And then other big resource companies like Glencore or the big oil majors, Chevron, Exxon, Shell, Anglo-American, and then big tech have also, they're taking billions out of Australia. Private equity, Blackstone, and then in all sorts of sectors, like the big Japanese trading houses, the massive, there's 10 big global car makers that have all got, massive operations in Australia. So it's amazing how you can come up with 350 of them. I've been doing that for about 10 years. And, we have an extraordinary amount of foreign ownership in Australia, but it matters a lot less now because with compulsory super, we have enormous collective investments offshore, and we're now a net exporter of capital, thanks to compulsory super and Paul Keating. So the problem of foreign ownership dominating Australia is not as bad as it was because it's being balanced by our sort of portfolio investments by all our super funds all over the world.
Thanks, Stephen. And just finally, Victor reminds us, or at least notes, that he calls it a public service announcement. He's noticed some ads on Facebook featuring me and my face spruiking a WhatsApp group to pick stocks. Thanks for pointing that out, Victor. Yes, I've been seeing them too, of course, and they are scams. So if anyone sees a picture of me and my name on a Facebook ad talking about a WhatsApp group spruiking stocks, don't have anything to do with it, please.
Have you thought about doing a Twiggy Forrest and litigating against Facebook for fakery? I mean, it is outrageous that they're just so blatant with this, isn't it? I mean, David Koch gets, everyone just gets scammed.
I know. I feel like it's, whack-a-mole. I report them to Facebook, but nothing happens, of course.
Yeah. So it must feel really violating to see that. I mean, I just can't imagine actually seeing. What did you feel like when you first saw it?
Well, as you say, I felt violated. I didn't, I also feel like, well, if anyone gets taken in by that, well, they shouldn't. Let's face it, that's kind of, clearly not something I'm going to do. I would hope that people would know that it's not something I'm going to do. Anyway, but look. So any listeners who see that stuff, don't click on it. Thanks for listening, everyone, to today's episode of The Money Café. I'll be back next week with James Thompson. Send in your questions to themoneycafe@eurekareport.com.au. Until then, I'm Alan Kohler, founder of Eureka Report.
And I'm Stephen Mayne, and we'll see you in a fortnight.